What is the role of stock options as it relates to value investing? That's an interesting question that I get all the time, and it's something that I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. And the Q&A series is quickly becoming one of your favorite parts of this channel, and so I'm going to continue on with these videos. And so in this particular video, I'm going to answer one of the most common questions that I get asked is, what do you think about covered calls and cash secured puts? And so what I'm really going to focus on in this video is the cash secured puts portion of that question, and in a subsequent Q&A video I'll cover the covered call portion in more detail. And ultimately this question arises from a larger question, which is, what do I think about the role of stock options in value investing? And you know, if you were to talk to some of the older greats of investing, there's a lot of people who just don't play with options at all. For example, Peter Lynch is famous for not dabbling with stock options at all, albeit he was managing a mutual fund, which is much different than what we do, which is manage our own personal accounts. And so I think we just have a little bit more flexibility, and thus we have an edge on Wall Street if we try and utilize stock options. But I must say that options are more for advanced people than people who are beginners in the securities markets. And as I always say, the most money that you can make is just by buying stocks low and selling them high. You do not have to dabble in the stock option space. And so as it relates to the stock options role in value investing, I really believe that the role of stock options is to help a value investor reduce portfolio risk. Notice how, guys, I didn't say that stock options are a way to help people or investors make more money. There's a lot of people in the investing space, especially in the retail space, that use stock options as a form of gambling. I do not do that. I have never sold a stock option from the perspective of a gamble to make a ton of money, 10, 15, 20, 100x my money. I could absolutely do that, but it entails a lot of risk, and it's not something I'm looking to do. And so the way that I use stock options, and the way that I believe value investors should be using stock options, is a tool. Use it as a tool to reduce portfolio risk. It's fire. Ultimately, if you use it right, you can cook yourself the tastiest meal in the world. If you use that fire wrong, you can burn yourself. And so just be careful with how you use these. Now, the first point that I want to make is that the way that stock options can help you reduce portfolio risk is, of course, it helps you reduce your cost basis with both cash secured puts and covered calls. I would say that cash secured puts is probably the best way to reduce your cost basis, because you ultimately, the point of a cash secured put is you write it out of the money, so a price lower than the current share price, and you get a premium that's very acceptable, which generally will give you a yield in that 15% or higher range as well. I typically target around 17.5% of an annualized yield, and I use long dated call options or cash secured put options. The second thing that options do for value investors is that they generate income in situations where you otherwise couldn't. You know, the problem with a lot of the securities that we follow, and you guys know when you look at the tracker, is that oftentimes a lot of stocks are trading above what their intrinsic value is. And so what the stock options really do, at least the cash secured put opportunities in that situation do for us, is they provide us with an opportunity to earn an income, an acceptable yield, while simultaneously allowing us to solidify that we are willing to buy the stock at a current or specific price. And so, for example, the stock's trading for $90 and we're willing to buy it for 70 because 70 represents half of its intrinsic value, but we don't think that it'll get there. Well, we can agree to purchase it for $70 and, generate a 17% yield in the meantime. And so it's a really good tool for us in that situation. And, I've used this a lot, and this was one of the reasons why in 2022 I significantly outperformed the market while a ton of people were losing money. Now, that's not a brag, that's just telling you what I actually ended up doing myself. And the major point that I want to make to you guys is that never watch channels like this or any other channels and think that it's more profitable to start using stock options just because they're harder to understand. It is always most profitable to just buy stocks when they are undervalued and just hold them. Options are a tool, but not necessary at all. And so if you are not comfortable with them, if you're new to investing, or if you just don't want to use them, you don't want to keep up with them, don't. There's no added benefit to you for not using them if you really aren't comfortable. Look, the only thing is, if you're not comfortable with using stock options, it's probably going to hurt you more than it's going to benefit you. Going back to my cooking analogy with fire, it's great to use fire to cook. However, if you don't know how to cook, you're just going to burn yourself anyways, or you're just going to make a crappy meal. So why bother? Now, the Montreal Stock Exchange, which is known for options investing, actually has definitions for cash secured puts, covered calls, etc. Like they have a really good website, so check it out if you guys are interested. And I just wanted to pull this one out because we are talking about cash secured puts. So they define cash secured puts as something that involves writing an at the money or out of the money put option. And so at the money would be you agree to buy the stock at the current share price that it's currently trading at, and out of the money put option is you agree to buy the stock at a price that's lower than the current price. Now, generally you want to write out of the money put options if you're going to sell them, and you simultaneously, because they're called cash secured, the secured part means that you simultaneously set aside enough cash to buy the stock. I will never sell a naked cash secured put or a naked put. It just doesn't make sense. You can get exercised at any time, so you always have to have that cash available. So just be careful if you guys are going to enter this world. And the goal is to be assigned and acquire the stock below today's market price. And I love how they wrote that. Every time you enter into a cash secured put opportunity, the goal isn't to not get exercised. The goal actually is to get assigned at that price that you're willing to buy the stock for. And if you don't get assigned, you're being compensated for setting aside that capital to be purchasing that stock at that particular price. So that is something that you guys have to sort of like change the way you think as it relates to cash secured puts. Yes, you can generate income selling cash secured puts, but the point of selling cash secured puts is not to generate income. The point is to be compensated for the time value that you set aside that money to purchase the stock at a particular price that's much lower. And so it's just a slightly different way of thinking about it. I know some of you guys will say, hey, look, it's the exact same thing. Personally, I think of it as something that's slightly different. It's compensation for my capital being set aside because I want to do something, which is, of course, buying that stock at 50% or lower than its intrinsic value. And so that's the way I think about it. It's compensation. It's not just I'm doing something to generate premium and the purpose is generating the premium in itself. No, the premium is compensation. And so just going back to this, so they provide an example here. They're saying that the investor is bullish on the underlying stock and hopes for a temporary downturn in its price. That's the only reason why you should be selling a cash secured put. If you get to a situation where you're selling cash secured puts just to generate premium, I think you're doing it wrong. However, I'm not the be all and end all on it. There are people who say that they significantly beat the market by selling cash secured puts all the time, every year, but I'm a little bit suspect of that. And so, the outlook that you should have with cash secured puts is you're hoping, I wouldn't even say looking, I'm saying like you're hoping for a short-term dip in the stock price followed by a longer-term appreciation. I think that's the right way to look at it. Now I'm going to provide you guys with a real-world example of how I think about cash secured puts. So here's a great cash secured put options opportunity that I'm looking at today, so you can see the date. So notice that Meta is currently trading at approximately $120 per share. And so, it is much higher than the share price that I'd like to pay. Because I'm valuing Meta at around $175 per share, I would love to own the stock at $100 or less. And so, the January 19, 2024 cash secured put gives us the opportunity to earn a $15 per share premium if we're willing to buy the stock at $100 per share. And so, you know what? I would actually love to buy the stock at $100 per share. Normally, I'm looking for a 50% price to intrinsic value, and so that would be lower than $100, but I'm very cognizant of the fact that I'm very pessimistic in my valuation. If you've seen any of my videos on Meta, you would know that I'm being very pessimistic on it, and so the valuation could easily be around $200 per share. So that's why I'm okay with the $100 per share. Plus, it just is a solid company in terms of like the targeted ad spending space. And so I just think that the company is going to be around for the long term, despite the fact that they've had some short-term challenges, which has pressured the stock price. And, I do expect them to have challenges in the short term as well as time goes on, because we're in a tough ad spending market right now. However, notice that, the net price that I would own the stock at if I were exercised on it would be $100 less the $15. So that is your net purchase price, which I always like to show. And this is what I'm talking about how it brings your cost basis down. And so, here's the real meat of it. What does this actually yield to me? So notice that the current yield is 15%, which is just the 15 divided by the 100. But because January 2nd is more than a year, January 19, 2024 is more than a year away from January 2nd. In fact, it's 382 days. This yield has to get annualized, and so it gets annualized a little bit lower to 14%. Now, do I really care? Because I get this premium on day one, I can reinvest the premium and generate a little bit higher return than just the 15%. It's not like this premium just sits idle as well. And so that's kind of the way I'm thinking about this. Now, I haven't decided if this is something that I do want to purchase. I think that it's more likely that the stock will go to 200 than it goes to 100, despite the fact that it's so close to 100. But you never know how the market sort of treats these things. And in light of the other opportunities that I have in front of me right now, it just seems like this might not be the best opportunity. And so although it seems like a great opportunity with a great company, because it generally doesn't sit around where I'd like to buy it, or the premium isn't generally where I'd like to see it, I'm probably not going to enter it. However, like I always say, the best way to sort of make money with stocks is, sometimes it's just buy it when it's close to half of its intrinsic value. It's kind of getting there at $100 per share. I'd say, you're absolutely there, and then just hold it for the long term and you'll generate a much higher return. However, I like to look at the cash secured put opportunities. And so in this situation, it's not a bad opportunity, but it's on the cusp of what I would like. And, there are other stocks right now. There's some home building stocks at the moment that are yielding, close to the 40s or 50% even. And so, this opportunity is comparing with those. And so I might pass on this particular opportunity, but the point that I'm trying to make is that tool that I just showed you and how I look at particular cash secured put opportunities is something you can do as well, because I actually make that cash secured put tool available completely for free, and you can get access to that in the description below. Just look for free cash secured put options or free options calculator tool, and you can sort of put in all of those metrics and figure out if the option makes sense for you. Now, the other thing is, notice how I showed you intrinsic value of $175 per share. Well, how do I build up to that intrinsic value? Well, I actually have this live tracker tool, and I've hidden all the stocks, but you can see that I'll have a stock like Alibaba where I'm valuing it at around just over $200 per share, and it's trading at close to $100 per share. So you can see that it's trading less than 50% of its intrinsic value. But what happens is, if you click into this link, where it takes you is into a full valuation for the company on a segment level. And if you want access to that, you can get access to all the models at this lower tier of the Patreon. And so you can see how I value Facebook or Meta. You can see how I value Alibaba, Tencent, all the names, Tesla, etc. And so, join us at this lower tier to get access to all that. And if you want to join us for an epic live presentation every month, you can join us at that higher tier. Now, if you've missed any other of the Q&A series that I've been putting out on this channel, no problem. You can get access to the whole series right here.